Does it pay to follow dumb money? My answer is yes, and I'll explain why. So just to go over what I mean by dumb money, we've all heard the sayings like, oh, if your taxi driver knows about the stock, it's probably overhyped and you shouldn't buy it. Well, there are some reasons why you should be able to buy it. And of course, going into this, I'm going to explain that these are not long-term strategies where you're going to hold these stocks for a long time. It's more of a day trading strategy, in fact, where you're going to hold this stock maybe for like a day or two just to make some quick money and enjoy the swing of the stock and to get out before anything drastic happens. So I'm going to give some examples of what I'm talking about. They're going to be basic strategies, which is simply buying and short selling. I'm going to give two examples of when to buy into a stock to hop onto a trend and when to short sell a stock hopping onto a trend. And sometimes how you can do it even on the same exact stock. So the two recent examples I want to go over now for when you should buy into a stock for it to go up is Hertz Global, ticker symbol HTZ. And the trend I'm talking about is overnight, basically, they went from about $20 a share down to as low as 40 cents. Now, typically when this happens, and you'll see a lot of videos explaining this concept, and there's a bunch of different names for it. I like to call these stocks the hype stocks because everybody's typically hyping them up. But basically what happens is some bad news comes out about the company. Either they're fraudulent or they were not producing as much as they were, or sales dropped drastically or something along those lines, and they take a huge dip. Now, when this happens, you'll usually see it continuing down for a few more days. And right when it gets to its low, it'll tend to rebound. And a lot of people call this the rebound effect, the V trend effect, a bunch of different names for it. And the reason this happens is because a lot of people who typically don't know how to invest, not to insult anyone, because there are people that probably do know how to invest and they're just hopping onto these trends. And what they're doing is they're assuming, since these are such usually either big brand names or just because a stock used to be valued at this price, they think that it should go back up to at least half of what it was, since it was trading at that about a week ago. And they put in massive orders, and it actually sends the stock up because the volume is so high in a good way with the big buying pressure that it actually makes the stock move up. I'll put a screenshot of Hertz to show you guys what I'm talking about. And usually with these stocks, you don't want to hold on to them long term. There's a reason they had this drastic drop. Of course, always people are like, oh, it could go back up, but I wouldn't count my blessings on it, because 10 times out of 10, these stocks will actually continue to go back down or have even worse news sending them even lower. So another more recent example of that I would love to go over is actually luckincoffee. Same exact scenario. They were fraudulent. There was a lot of bad news about them. And they went from about $51 a share all the way down to $1. Well, just above $1, having a huge drop. And again, I would not invest into this stock long term. However, if you bought into the dip, you would have essentially doubled your money, as they went from $1 to about $5.50 as their high. And now they're currently trading at around $3 a share. So even if you didn't get the exact low, you still would have made a decent amount of money on this. Now, they just got more news for delisting. So obviously you can see the stock go as low as $0 a share, and you don't want that to happen. But this rebound effect is a great way to make pretty fast money, and you don't even really have to be on the lookout for it. You'll see in the stock market news that, oh, this stock dropped 80 to 90%. You could wait a few more days for it to drop even lower, and then slowly, because you really can't predict when you're going to hit the bottom, put money into it until it goes back up. And I would suggest the same thing with the previous stock, Hertz. And again, I'll put a screenshot up to show you guys what I'm talking about. So that's a great way to make some kind of fast money for buying stocks, but now I'll show you when I'm short selling stocks. So the first example I want to go over is Aurora Cannabis, just because they did have a reverse stock split kind of recently, and I would love to talk about it. So everyone's been extremely excited about the cannabis sector. When it was first announced that California was going to legalize it, and now it is legalized, the next big step is where people are going to be waiting for it to be legalized federally for another big jump in the market. But back when this is happening, a lot of cannabis stocks were taking over the sector. You can see that Aurora Cannabis even was at $130 a share at one point. Now, I know since they had a reverse stock split, I don't believe it actually was ever $130 a share. It probably was at like $13 a share. But either way, the percentages will still be the same since they were reevaluating that way. And when I'm talking about this, since there's a big hype train going on this, you know that eventually when these stocks are up 1,000% or so, that they're going to have to topple back down. They're trading months or even sometimes years into the future and what they would think they would be valued at. But currently, they should not be trading at that. But since there's so much buying pressure and people are like, oh, in the future, this is going to be a leader in their industry and it's going to be a huge stock to own. But it was trading on the false pre-assumption that everything was going to move super fast and it was going to get legalized federally a lot faster than it really has taken. So again, the stock dropped to as low as $5 a share. So if you shorted from 130 and got it down to 530 and you covered your short, you would have made a ton of money as well. And like always, I'll put a screenshot to show you guys what I'm talking about. For these type of trends, I like to consider them hype trades as well, just because everybody knows about these stocks and they're taking a drastic increase. So just like I was saying before, these are even some of the stocks that you could play both ways. I would prefer to play these type of stocks both ways versus the other ones, because the other ones are companies that were well established, trading really, really high, that took a huge dive based on usually fundamentals and principles. And these stocks over here, they don't really have anything wrong with them. It's just that everyone overhyped the stock and they went way down. So I would feel a lot more safer like trying to rebuy into the stock after a bounce back and shorting it after I know it's way overvalued. And if you're wondering how to tell if the stock's overvalued or not, you can look at the PE ratio. You shouldn't always consider this a way to tell if a stock's overvalued, but it is a good way to determine how overvalued if it really is. And the last example that I want to go over, excuse me if I pronounce this wrong, but it's Emeron, ticker symbol IMRN. And this stock was insane. It had 1,000% increase pretty much overnight. And I believe it went from about $2 a share to $29 a share. And after that jump, people knew that it had to go back down. There's no way it was going to be able to withstand and hold that position. And after its jump, it actually traded all the way back down to $8 a share. So this is what I'm talking about. You'll see these stocks in the news all the time. It's great because you actually don't have to put a lot of time in research. You don't have to look at any of the fundamentals. You don't have to look at, who's running the company, how long they've been around, how many employees there are, and just doing a ton of work. You can just play the trend and pretty much just play to follow dumb money. And again, what I mean by that is people hear these news, so they buy into the stock. There's a correction that's going to come because they know it should not be trading at that. So a huge dip will follow. And all the people that bought into that were thinking they were going to hold for a long time, lost that money. Instead, it could have been a great way for a short play. So yes, in my opinion, it is great to follow dumb money every once in a while. So I hope you guys liked the video. I love making these. Remember to leave a like, comment, and subscribe for more future content. It really helps us out over here to keep going. Thanks for watching.